unemployment and wage growth figures on Tuesday the 15th of October, and then inflation on the 16th will be the main macroeconomic features of the week, especially now the Bank of England Governor Andrew Bailey is dropping hints that the old lady of Threadneedle Street may move to cut interest rates faster than markets think. And on that note, by the way, the European Central Bank is expected to reduce its main refinancing rate again on Thursday the 17th. In this context, it will also be interesting to look at the trading statements that are due from a trio of mining giants in the coming week, as few industries are as sensitive as this one to the global economy. Rio Tinto is due to release quarterly output updates on the 15th, followed by Antofagasta and BHP on the 16th. BHP still has a secondary London listing, even if it lost its eligibility for inclusion in the FTSE 100 upon the switch of its primary listing to Sydney in 2022. The FTSE 350 industrial metals and mining sector has not really set the world alight over the past year, with a 6% gain. That's enough to leave it ranked 30th out of the 39 sectors that comprise the headline index. Patchy economic growth in the EU, and most notably the bloc's economic engine Germany, lingering fears of a US slowdown, and a genuine concern over China, the world's second biggest economy, as it wrestles with the property bust, have all weighed on the sector. The equity benchmark has, to some degree, followed the roller coaster path of the CRB Commodities Index, which tracks 19 commodities, including aluminium, copper, and nickel, with a 13% weighting to base and industrial metals, and 7%, by the way, to precious metals. The recent rebound may well owe much to China's efforts to boost its economy, with interest rate cuts, reductions in the amount of capital that banks have to hold, and changes to the rules for buying property. Iron ore and copper prices have responded to this package, even if the focus of Beijing's plans really seems to be boosting domestic consumption and consumer spending rather than more construction and infrastructure building. Now, this all takes us to these trading updates, which will focus on output and costs relative to guidance given earlier in the year. The details on the balance sheet, cash flow, and profit and loss account, they'll all come with the full year numbers from Rio and Antofagasta and the first half figures from BHP sometime next spring. Analysts and shareholders will therefore look for any changes in output forecasts and targets, as well as comments on the cost of production and capital investment, since all of those will directly influence profits and cash flow for this year and potentially beyond. Again, first up is Rio Tinto on the 15th. Its biggest earners are, in order, iron ore, copper, and aluminium. Management currently expects unchanged output in 2024 for iron ore, bauxite, and aluminium, with an increase in copper and a small drop in alumina. Copper production is forecast to rise 2% this year, and Rio Tinto has a plan to increase output by 3% on a compound basis between 2024 and 2028. Meanwhile, overall group capex is budgeted to run at $10 billion a year for each of the next 3 years. Antofagasta is a pure play on copper pretty much, barring some output of molybdenum and gold. In its third quarter update due on the 16th, Antofagasta will reference its output and cost targets for 2024. After the second quarter and first half results, copper output is still forecast to come in between 670 and 710,000 tonnes, but management has steered expectations towards the low end of that range. And as a result of that, net cash costs are now expected to rise to $1.70 a pound compared to initial expectations of flat at $1.60. Finally, BHP's biggest earners are iron ore, copper and coal, although boss Mike Henry says that 2/3 of future capital expenditure will go toward copper and potash. BHP has said little since its full year results in August, but at that juncture the miner guided to higher copper output by around 4%, higher iron ore production, flat energy coal output and a drop in steel-making coal. On the 16th, analysts will also look for comments on these output trends and plans, an update on capex, which is due to increase to $10 billion this year from $9.3 billion last, and any further thoughts from Mr. Henry on the aborted cash and stock bid for Anglo American. Please note, by the way, that Anglo American will release its third quarter update on the 24th of October, and Glencore will follow on the 30th. Thank you for watching. I hope you and your families are all keeping well, and I look forward to seeing you again next time.